In today's video, I'm going to show you my super simple 1-minute scalping strategy that I use every single day in the markets, known as the Ace Trader method. First, I'm going to teach you the exact steps and what you'll need to be looking out for, and then we'll hop into the markets and I'm going to show you 3 live examples executing this system step by step. This is the same system that allowed me to do over 30K last month and to gain over $750,000 in funding. And by the end of this video, not only will you know the Ace Trader method and how to actually use it in the live markets, but I'm also going to give you a step-by-step checklist that you can have with you to execute every single day. Let's get right into it. The Ace Trader method is a 3-phase system. The first phase is going to be A, anticipation, and this is going to be our first 3 steps. The next phase is C, confirmation, and these are going to be the next 2 steps. And then finally we have E, which is our execution, and these are going to be our final steps. So starting with phase 1, we have A, which is anticipate. These are going to be the first 3 steps that we take, right? So you can see here, the first step is we need to trade the New York session at 9:30 to 10:30 Eastern Standard Time. Now, why we want to do this is because we need consistent volume. Volume is going to be big candles in the markets, right? And we need that consistently in order to execute. So that's going to be very, very crucial. The next thing we need to do is to check any news events for the session. Now, this is going to help you to spot, like I said, big volume and big volatility. The first phase is all about setting up the game plan for the markets. What are the markets doing? And if we know that we're going to have some high volume news in the markets, then this is going to add potential volatility, and this could give us the best risk to reward trades. So it's important that we do this, and you can do this by checking my FX book. And it's also going to be important if you're trading a funded account to know whether or not you can trade certain news events or not, because some firms will not allow you to trade certain news events, and this is going to be very, very crucial in your day-to-day checklist. Now, the next thing we want to do is identify our direction on the 5-minute time frame that we're looking for. So if we're taking a look at the markets, right, we want to see what the direction is. Is price creating higher highs and higher lows, which just means that price is in fact bullish, right? So the creation of higher highs, you can see here, in higher lows, meaning this high is higher than this previous high, and this low here is higher than this previous low. This means that the price is in fact bullish, right? So this is going to be a bullish market structure here. If we were creating lower lows and lower highs here and price was going down, this would be our bearish market structure, right? So we need to identify, is price going to be bullish or is price bearish? So taking a look at this market structure here on this 5-minute time frame, price has been creating higher highs and higher lows, right? So what we want to do is we want to check off these areas as we go through them, right? We want to identify where price is going. It has been bullish. Now, this isn't to say that we're going to be looking for buys. We actually don't want to set a bias. And this is where most traders go wrong, because our next step, our confirmation, is actually going to show us when price is going to tell us to get in. We need to be reactive off of what the markets are showing us and not just hop in based off of a bias, right? So our next step is going to take us into phase 2, confirmation. So these are the 2 steps that we need to do for our C confirmation. So coming back into our example here, if we've identified that price is creating higher highs and higher lows here, we then need to mark out our key zone. This is going to be our area of resistance. So in terms of marking out our key zone, this is going to be the highest point that price has reached, right? So I'm going to mark out this zone and area of resistance here. I want to mark out the highest point that price has reached and the lowest point that price has reached, my key low, right? So what is a key low and what is a key high? Let's explain this real quick here, right? So if price is creating this bullish market structure, right, you can see this was our previous high. Price pushed and it broke through this previous high here, right, to create this high up here. This is going to be my key high. My key low, though, is going to be the lowest point that started for the move that broke our previous high. So if this is my lowest point that started for the move to break my previous high, this is going to be my resistance here. And so I'm going to set my resistance below this low and above this high here. That is going to be my area of resistance on our 5-minute time frame. So if I was taking a look at our chart here, well, let's dial this down. So if we're taking a look at this chart here, in terms of my key area of interest and how I like to look at it is on the line chart here, because you can kind of better see it here. Price was creating higher highs and higher lows, but then we came down and created this low here, we created a lower high, then we created a lower low, right? Because price is just broken through this area of interest low. So where I'm going to set my resistance at is at the key low. And then where is my key high? Well, my key high is the highest point that started the break of my low, and that would be here. So this is the highest point, right? Because we had this low, broke through these lows here. We had a correction. This was the highest point. All of this is one move to break this low. So this is going to be my key high, and that's where I'm going to set my resistance at on this 5-minute time frame. So if we go back to the candles here, how I actually want this to be set up is from the candle's body to the wick, right? From the candle body to the wick. And all we need to do is to see our opening candle, our opening 930 candle, to either close below or above this key area, which is our next step, right? So our next step is to wait for price to close either above or below our key zone on the 5-minute time frame. So that means that price needs to close within this area here or within this area here. So we need to wait for our next candle, right? So, and it's very, very important that you wait for the candle to close. Wait for this 5-minute candle to open and close. That's what we're going to do. We get our next candle here, and once we got our next candle, you can see that price is now closed below our key area of interest. And now we can move into our final phase, which is E execution. And this is where most traders get stuck. What I see over and over again is traders who know exactly what they're looking for, but when it's time to execute, they're chasing trades, they break their rules, and they hesitate. And this is something that holds a lot of traders back. If you're watching this and you've been struggling with inconsistency, hesitation, and breaking your own rules, and you're ready to make a change, in our one-on-one Ace Trader Academy program, we work on tightening your execution with proper routines, discipline, and accountability. That way you can confidently go into the markets and execute with clarity. If you keep seeing the same mistakes and you want to break this repeated cycle, there's an application in the description down below. We want to work with traders who are ready to make a change in their trading, to build the right habits and have the discipline to consistently execute. And these shifts alone can change how you show up in the markets. Results vary and no trading outcome is guaranteed. Now let's get into the final step, which is our E execution. And this is how we're going to execute every single day. So now that we've waited for price to break and close below our key low, what is our next step? So it says after the 5-minute candle closes, enter our trade on the first 1-minute candle that closes in the direction of our trade. So you can see here our 5-minute candle closes as a bearish candle. So we want to dial down to our 1-minute time frame and we want to enter our trade on the first 1-minute candle that closes bearish. So you can see here, this is the first 1-minute candle that closes bearish. So we're going to enter our trade. We're going to take a sell stop, and that's how I activate all of my trades. We want to set a sell stop, and then we want to set our stop loss to be above the candle high. Why? Because that is our next step here in our execution. So you see, set stop loss safely above or below our current 1-minute candle. So this is going to be our current 1-minute candle. And so what we're anticipating is for this area of interest here above this candle to be the highest point of our new 5-minute candle. That's why we're going to execute right in this area and set our stop loss above that 1-minute candle. So we're going to confirm this here. Boom. And now we've entered into this trade. Now, what is the next step that we need to do on our execution? And it's important that we do all of our execution steps right. That way we have no problems. So the first thing is we're going to set stop loss to break even at a 1-to-1 risk to reward. So you can see here price is set to a 1-to-1 risk to reward. That's when we're going to move stops to break even. So we're not going to set our actual TP, but we are going to use this short drawing tool to mark out our key area, right? So this is going to be rule of thumb at the 1-to-1. We're going to move stops to break even, right? Boom, 1-to-1 gets hit. We're going to move now our stop loss to break even. And then you can see here, we wait for our 1-to-2 risk to reward to be hit. So I'm going to drag out to a 1-to-2 risk to reward. You can see that there. And then after we get the 1-to-2 risk to reward hit, let's wait for it. Let's see here. Boom, we just got the 1-to-2 risk to reward hit, and that's when we're going to go ahead and take our profit at a solid rule of thumb. Just go ahead and close at that 1-to-2 risk to reward. But another step further can be taking profit after the first 1-minute candle closes in the opposite direction. Oftentimes this will mean setting a larger key area of resistance in terms of a target. That way we can generally have a larger risk to reward. But as a rule of thumb, we generally just wait for a 1 to 2. That's going to be your most consistent trade there. In the future, I'll teach how we target larger time frame areas of interest. That way we can generate a higher risk to reward. But utilizing this system, a 1 to 2 risk to reward is going to be your most consistent there. Now that you guys seen how the system works, let's go back and execute this in the live markets step by step. So coming into the markets, we first need to identify the direction. If we see here, price is clearly creating lower lows and lower highs within this bearish market structure here, right? And how we can better see this is by looking at our line chart. So our line chart clearly shows that price is creating lower lows and lower highs within this bearish market direction, right? So how do I want to actually set out my area of resistance here on this time frame, right? So what I need to do is I need to identify where my key high and where my key low is. So the only real high that I can see within this market structure here is this area of interest here. This is still just all essentially one bearish move. Even though we do have a sort of pullback here, this is going to be all one move. So what I'm going to do is I'm going to set my key area of interest high. And then if price is creating a key low, that is going to be the key low, especially if it doubles with that area of resistance here. So whatever our current low is, if price is creating a bearish move, then that's where we're going to set our resistance. So then we need to wait for our 5-minute candle to either close above our area of resistance, which is either up here, or below our area of resistance down here. So we wait for that first 5-minute candle, and we need to wait for the first 5-minute candle because if we don't, we could potentially see false breakouts. Now that we've gotten this break below this area of interest low, let's actually dial down to our 1-minute time frame. I'm going to get rid of this here and this here, and we need to enter on the first 1-minute candle that closes bearish in our direction, right? So the first 1-minute candle that closes as a bearish candle, we're going to be looking to get in on. This closed as a bullish candle, we're not looking to trade that. Boom, this closed as a bearish candle. We're going to go ahead and enter this trade here with a sell stop, and then we'll set our stop loss above this candle's high here. And then what we're going to do from this point is we're going to set up our 1-to-1 and our 1-to-2. So my 1-to-1 is going to be right here. So 1-to-1 risk to reward is right there. I'm going to set, and generally I'll set an alert at this area of interest, and then my 1-to-2 risk to reward is right there, and we're just going to get out at a 1-to-2 risk to reward for rule of thumb. So we wait, price pushes down, we push back up. Let's see where we go. Boom, we just hit our 1-to-1. So we're going to move stops to break even at this point here, and we're going to let price continue to run. Boom, we just hit our 1-to-2. We're going to go ahead and close that position there. So you can see how the 1-to-2 would have executed here. You can actually even set a take profit for the 1-to-2. Like I said, I don't set a take profit simply because we'll sometimes target larger key areas of resistance. Let's go in now to example number 2. Okay, so for our second example, we can see here that price is creating lower lows and lower highs within this bearish structure as well. So what we're going to do is we're going to mark out our key low, which is going to be our current lowest point, and then our key high, which is our high that started for the break of this low here. So, and how we can see this is if we hop on our line chart, you can see here that this is clearly our key high, and this is going to be our key low, which is our current low now. So now what we have to wait for on our 5-minute time frame is a break below or above our key area of interest, and we want to set this resistance out at 9:25 a.m. Eastern Standard Time. So make sure that you are converting for Eastern Standard Time. 9:30 is going to be very, very important, but it is Eastern Standard Time. So make sure if you're in other countries that you're converting to that 9:30 Eastern Standard Time, that New York open, right? So we wait for our first 5-minute candle, and notice how this 5-minute candle pushes below this area, but it does not close below. And in fact, it closes bullish. When this happens, this means we have to wait for our next candle. So we can't execute. We need to wait for our next candle to close. Boom, this candle closes above our key area of resistance. Now, what do we need to do? We need to dial down to the 1 minute time frame and execute on the first 1 minute candle that closes in our direction. So we need to get in on the first 1 minute candle that closes bullish. This one is bearish, so we wait for our bullish closure. Boom, we just get this bullish closure. We're going to set a buy, and then we set our stop loss to be below that candle low, right? So from this point, I'm going to mark out my one-to-one risk to reward. Make sure that I am on that, right? So my one-to-one risk to reward is going to be right here. Set that there. And then my 1 to 2 risk to reward will be up here. Boom. And so I would normally set an alert there as well. So now we need to see how this executes. First candle pushes up. We get a nice bullish move. Boom. We hit our 1-to-1. So now we need to move stops to break even. And then we let this trade play out. You can see here creeping up on it, almost hit it, just barely, and boom. We just hit that 1 to 2 risk to reward, and you can go ahead and close out that trade there. Now let's get into our last live example. Again, I told you guys that I was going to give you this checklist. So comment checklist down below and I'll send it to you completely free. Or you can scan this QR code here, get it completely free. So for our third example here, we can see that price is creating lower lows and lower highs within this bearish structure here, as we just created this new low that broke through this area and nothing has broken our highest point. So where are we going to set our resistance at? We're going to set our resistance right here at this low and then at these highs here, right? So I'm going to mark out my area of resistance here. And then I'm going to mark out my area of resistance down here. So now we need to wait for a break and closure. Price just pushed and closed below this area. So you guys know we're looking now for our first 1 minute candle to close as a bearish candle. That's when we're going to execute. So we dial down to our 1 minute time frame and we see here, what does our first candle do? Our first candle is very bullish. This is something to look out for. Okay, let's go to our next candle. Very bullish indeed. Let's go to our next candle. This closed as a bearish candle, but now look at where we are in the markets, right? So we're above this key area of interest high. This now invalidates our structure. Why does it invalidate it? Because now that we've taken out this larger time frame area of interest high, it flips the structure from being bearish, where we was creating lower lows and lower highs, to now we would anticipate we create a higher high and we would anticipate now higher lows. So what we need to do now is wait for this 5 minute candle to close either above this area or back inside of this area before we look to do anything. And this is going to be a case scenario where you're going to see our first 1 minute candle, but it's above our key area of interest, right? So that means that this candle is extremely bullish, and you can use the HTF power of 3 indicator, which is here, to see how this 5 minute candle is closing. You can just see how strong this 5 minute candle is here. So we have, let's say 1, 2, 3, we have 2 more minutes into this 5 minute candle. Again, closing as a extremely bullish candle. So what we're going to do is we're going to take a look here and see what happened. Okay, well, price closed below this low, but it didn't give me my key entry. Now we're looking for a closure above this high and a possible flip. Why? Because we just taken out a key area of interest where price can flip. Now we're going to dial down to our 1 minute time frame and look for our possible buy. Now let's see, how does the first 1 minute candle closes? The first 1 minute candle closes as a bearish 1 minute candle, so we need to wait for the next one. This one closes as a bullish 1 minute candle. Now, how we're going to execute on this one is a little bit different than the past two. Why? Because look, we've just executed on it, but this is not the lowest point of our 5 minute candle. We want to make sure that our stop loss goes below the lowest point of our 5 minute candle. Where's my 5 minute candle? Well, you can see here with that HTF power of 3 that this is the lowest point. So I want to make sure that I'm setting my stop loss to be below that lowest point there of our 5 minute candle, even though this was the first bullish candle. That's how we're going to set our stop loss. And so then what we do is we're going to execute this the same exact way. We're going to draw out out our 1-to-1. So our 1-to-1 is here, and this is where we're going to put an alert. And then our 1-to-2 is going to be up here, and we'll set an alert up here as well. Boom. So now let's see how this executes. Price nearly takes us out here immediately. Let's see if we get taken out. We do not get taken out. Let's see if we hold. Let's go to play through. Price hits our 1-to-1, at which point we move stops to break even and anticipate a possible bullish continuation. And boom, we hit the 1-to-2 and we can get out of this trade here. Now notice how on this trade here, once we set our stop loss below our lowest point of our 5-minute candle, we almost nearly get taken out. That's why we have to make sure we set our stop loss below the lowest point. Oftentimes it'll be our first 1-minute candle. We'll close in our direction and we set our stop loss below then, but sometimes it's not going to be, and we need to be able to make that adjustment there to make sure that your 5-minute candle low is the lowest point, and that's where you're going to set your stop loss. And you can see the 1-to-2 actually being hit. Again, if you guys want to execute with me every single day, a link is down below to join our live VIPs. You can join and trade live with us every single day. It is titled VIP in the description. Again, and if you got any type of value out of this video, I ask that you like this video and comment one thing that you learned down below, and to subscribe to the channel because we're going to be continuing to post consistent bangers in 2026.